Alright, so welcome back, guys, to another lecture. Today we are looking at the trading for the New York session on the October 17th, and this is the Nasdaq E-mini futures December contract. And I know my chart is clocked, but these vertical lines, these are timestamps. As you all know, that's how I mark my timestamps. The purple lines are opening ranges. The dotted lines I have the dashed lines I'm having initial buy side, initial sell side, and openings. So as you can see right here, we are having a clear market maker sell mode right now. So we are having the market delivering buy side. Remember, in the sell mode though, we are having an original consolidation. We have the market delivering on both sides, so we deliver buy side, then we deliver sell side. Now, having my original consolidation as this green box right there, going into the pre-market session, having my original consolidation, I'm having a retest back into the original consolidation, staying in the upper half of that original consolidation. This is a retest. We rally higher coming into the pre-session. This is my accumulation of buy orders. We rally into today's 12 a.m. to 12:30 opening range. Right there we have reaccumulation of buy orders. Right there, this reaccumulation of orders. 8 a.m. opens up, we managed to trade higher, forming an intermediate term high. This, I tried making a recording about this because I hopped on the charts prior to the market, to the pre-market, but my settings were not aligned. So we have an intermediate term high, a short term high, a short term high. This is the new day opening up. For the electronic trading hours, it is small, but I talked about this in the Asian session. So we're having the market dropping, coming back into this accumulation. We have a fair value gap into that was not touched, going into the market open. But in this market open, we first manipulate. Now this gives you what you are going to work with. First and foremost, we take out buy side when the market opens up, then the market rallies lower. We do not take out this low. Now from that low, from 9:30 to 10 a.m., I'm marking my opening range, having that as the lowest low and this as the highest high. And after 10, I'm not interested into that. The highest high before 10 opens up and the lowest low after 9:30. So I won't lie, at this I expected the market to rip and drop lower, coming back into the original consolidation right away, but we failed to do that. And what is my indicator for us failing to go lower? This 12 a.m. to 12:30 opening range for today's trading is what I expected the market to use as A side for dropping lower, coming back into the original consolidation as my sell side. And note that we traded, if you watched yesterday's video, we had a trade from this high dropping lower, coming into this new weekly opening gap for this week, for Monday 13th October. So we trade into the 0.25 or the upper quadrant of that new weekly opening gap, and the market gives us a start of the market maker sell model. So I'm calling it a sell model because I expect the market to come back. According to ICT's teachings, we have to sell back into this, considering this as my original consolidation. Alright, so I expected sells right here, leaving this intermediate term high untouched, but the market failed to run immediately after closing below this opening range low. We happened to trade back into it and close above it. So look at the purple lines right there. This is a 930, we open up, we drop lower, so I expected the market to stay above it for the precession and going into the opening bell. After the opening bell, I expected us to drop and close below, then retest that, going lower into the original consolidation. So the market traded into that and we ran back and closed above that opening range, and this is a signature to me that there are no sales going to happen right now. And the market rallies into the intermediate term high, and this nullifies the confirmation that this is an intermediate term high. Now I'm seeing it as buy side. The market rallies into that, we drop one. Now this is taking buy side prior to 930, and what is that? What does that indicate? We take out buy side first. That is scale ups model, so I'm looking for buys, I'm not looking for sells anymore at this particular session. So the market drops into internal range liquidity, taking out this low as sell side. Now a fair value gap forming when we are taking out sell side. When it is inversed, it is your entry. So looking into this reaccumulation right here, I'm having a bullish fair value gap, so I actually wanted to execute at this because we trade and give it a mohawk. The wicks do the damage. We were staying above half of that, and I think I executed at this candle for buys. Going into longs, now we run. Remember, as you can see here, we are respecting the initial sell side. We tap that, the market rallies back into that, and then we drop. Now we come and close above it. This candle gives me my bullish order block for lower prices. Now measuring from I'm looking into this high, and where the move to take this high out starts from, just there you get the negative 0.25. so that's my first profit scaling. And in this market maker sell model, I expect the market to sell from this intermediate term high because we had the new opening gap, as I had considered that as I'd considered it as a key level. So I wanted to use that to give the market a sell-off, but it failed. Then the buyer switched, we rally higher. After rallying higher, having my order block with initial sell side. So this black candle having initial sell side into it makes it a institutional candle. Yeah, the market comes back, taps into that, add more positions. This is a breakaway gap, expect that to be left open. So as I have this high taking out the negative 0.25, I'm seeing a high that has failed to reach the 12 AM to 12:30 opening range for yesterday's trading. So I'm expecting this high to be taken out, trading into this now for me to start looking for a sell model right there. If I'm to look for sells, I expect the market to start at this. Now going into that, actually I'll execute a sell if we manage to close below this. I missed my optimal trade entry right here inside here. You can see I missed that. I have the market trading into the 10 AM open right there. This is the 10 AM, this is the open of that, and the market taps that and we rally higher. That has been marked on the chart all along. So we trade, fail to reach the daily fair value gap lower. Does that show? This shows bearishness. Okay, now we trade above the 12 AM to 12:30 opening range. Now I'm going to be trading real time. Now this is real time. We drop from a fair value gap, or rally back into optimal trade entry. You might not understand what I'm telling you. It's just that high to this wannabe breaker. So optimal trade entry, just like that. So if you extend this further into price, I'm having this. So optimal trade entry, my sells right here. I'm having a fair value gap that the market has just tapped. A closure below that current low is going to give me an execution for sales. I want this to be a bearish fair value gap to push price lower. Okay, that is my execution lower. This candle's closure. Stops at the 12 a.m. to 12 a.m. to 12:30 opening range high for the 16th of October trading. Now we are coming back into, let me put this off, and need these levels, and I need my automated entry level. So if that is my execution, I'm having that as the automated entry. Market has traded back into a close below it. This would have been my execution. The market tapping that again, but market rips into half or into the sweet spot and then accumulate, coming back into the 0.75 level, this dotted line, and then we drop. So this is my execution, and I'm looking for a move that is going to take me back into the original consolidation. So this is what I'm looking for. This is what I'm looking for to complete this market maker sell model. Okay, yeah, so that's it. Tapped in. I'm going to put this away for clarity. I think I'll put that off right there. I think I need a screenshot of that. Sorry. I think I need a screenshot of this. To interpret this back into the, okay, successfully taken. Needed that screenshot. Not initial buy side, just there. Trade close at that, retest that. I'm expecting the market to use this as a push lower at 10 a.m. open. And we happen to inverse this, but I'm looking at this initial buy side as for precision, these levels, and the 10 a.m. and we might happen to use this as a bearish breaker, so I'm going to mark that as red. Now this is me calling out things before they happen. So this is what I expect to be my breaker. Mark this at the bottom of that. I'm going to close below that. Expect the market to use that and bounce off that, just where we are at right now. Expect the market to close below that and bounce off, giving me a sell off of that. I'm having traffic at the new day opening gap here. I think this might slow us down, and then this order block too. So I'm telling you that, so I do not want to be scared or to be frightened to take out my position early. So as long as we are still trading, we have not yet closed below that, it hasn't turned into a breaker, so we retest into this bearish fair value gap right there. Now that candle will give me a bearish order block. If this closes bullish and the market manages to trade below it, the moment it comes back into that, it's a bearish order block for pushing price lower, probably going into this low with speed. I need a closure below that right there. I'm fearful of the new day opening up, giving us some traffic. And note that this 10 a.m. open is exactly at the middle of the initial buy side and initial sell side, so it's just in between that. That gives it more right there. Execution for more shells to drop low. Just like that, pushing price lower to take out that low. Or tapping the opening up. Stop loss is at previous entry. Yeah, I expect the market to be well behaved at that. You have that candle closure below this candle's low. Now the market is retesting into that candle, the top wick. Now I expect a sell off from there to reach this. I'm looking at this as a barricade now. I don't want price to tap it and come back higher. If it does, I'm going to draw a premium and a discount onto this range so far that the market has moved, and I'll see how far the market can manipulate and ensure proper stop loss management. Now this is how you manage a trade running. So we have closed below that. I wish the market can use that as a PDR, push price lower. Having that order block, I'm also fearful of that. I want the market to drop and close below that, leaving this range that has initial buy side and sell side. That's what I'm fearful of. Now drawing the quadrants for this range. I wouldn't draw this if I didn't expect the market to, if I didn't have the market reacting from that. This needs to be extended and this to be make this blue, black, blue, and then reverse. So the market respecting this range between the 0.25 and 0.5 would be my best case scenario, but if we happen to trade into premium, I'm also fine with that. So my stop loss is literally above the optimal trade entry right now. having fair value gaps all over, and we are trading back into that fair value gap. I expect the market to stay within the lower half of that. We just rip back into so I'm having another one on top of this, not the initial buy side, not how the market respects that initial buy side. So I'm not going to draw these fair value gaps. I'm looking at this level. I want it to be respected. This has been fully filled. I want the market to reclaim that going lower. Now this is me sharing insight, and I think this is helpful to you guys. So this is happening real time. This is literally happening real time. Looking at the 10 a.m. that red line there, I'm looking at how the market reacts off this. If we can close below that, or we can use that to go into discounts. If that candle closes below that, that would be great. Just say that, like I jinxed it. Just said it and it went in the other direction. Okay, so I have the market closing below that. Now look at how the bodies have respected this candle to give us this push lower. Look at the bodies respecting consequent encroachment of this. That ain't random. How far can the market manipulate after that initial buy side for the day? In Asia, that's where I marked that. That's where I marked that. But this market coming into this and failing to reach, let me look into this further. Out of this, I don't want my chart to be cloaked. Turn off this optimal trade entry levels. So having a fair value gap with an inversion, so I'm expecting the market to drop from that. I think I should put this off for clarity. Let me just be like step reading, but know that there is an execution running. Having 10 a.m. to 10 a.m. open, expecting this to give me a bearish breaker. So if I expect that, that means I'm having this as my breaker. So yeah, I think we might trade into half of this 0.5 of this trend, half of this trend going into premium, then we sell off. So I'll be fine with that. Market coming into that and selling off. If it fails to reach that, then well and good. But I wish for initial buy side to show me a little bit of price action on it. So I'm looking at this black line. Why am I saying that? Because this candle has rejected. I didn't give you a reason why I'm expecting it to go back. This candle did not close below this, so as I told you, it's like a barricade for price. And looking into my trading, I do not have, what am I missing here? I don't have a first presentation fair value gap marked. I have 930 open, 931, 932. have a volume imbalance here and a fair value gap. So this is my first presentation. What I fear most, what I'm fearful of most, is the market reacting on a certain level that I do not have an idea about, and I just see things happening. So I'm more grateful on me doing something that I understand and know how it can work with the market. So this has to be a bearish fair value gap in the market. Okay, so this, I expect this to be inversed, turn into an inversion fair value gap. So I'm going to mark it as orange, just like that. Remember, we are working in the 9:30 to 10 a.m. opening range, just like that. I think, yeah, and that gives me clarity upon this. So marking in, yeah, so these are the quadrants I'm using for the 9:30 to 10 a.m. opening range. Now we are trading at the upper quadrant. I didn't have to use this, I had to use this. We are trading into that. We failed to trade to half of that range. Now we traded above the upper quadrant, so having this to push price lower. We are already in premium, so I wasn't comfortable with the market dropping off where it is, but now I know we are already in premium. We're already in the premium of this one. I expect the market to drop, giving me reaction of this and then continuing low. Having this as my other traffic, this fair value gap that gave us this move higher, so I want this to be inverse, drop lower. Let me mark this as an inversion fair value gap. Now I was wondering, why is this so colorful? Okay, some of you are asking why am I copying what ICT did. I just love the guy. Sincerely speaking, I just like him. He's my role model. I like how he teaches. Like his teachings, I take those as a father talking to a son. So I like what he does. Closed above that, expecting this to be reclaimed. Okay, now I want you to note how the market has been trading into, I'm going to zoom for you into the initial buy side right there. Note how the market is using this level. Tap that, wicks do the damage, we drop, come back, top of this fair value gap, then we rally higher into this. As long as the market is trading above the price and disrespecting the wicks are disrespecting the fair value gaps, but the bodies are staying and respecting the initial buy side liquidity. Putting this off. Now I'm expecting my sell off. So if I'm to measure for my optimal trade entry, I think the market is done working with that range. I'm to measure my optimal trade entry right there. I have to get above a high now. So yeah, sorry. This is my breaker. So this would have been the execution for sells. Now this is the trigger for sells. We have closed back below the 0.618. Now I'm expecting a drop from that with speed. Need a closure back below 0.75 of this 9:30 to 10 a.m. opening range to trade into the 12 a.m. to 12:30 opening range. We have closed below that. I need the market to use it as significant level. The market to show me some reaction off of that. Note the 0.75, the market has just tapped that right now. Now we are trading back into that fair value gap right there, having a volume imbalance on this. Consequent encroachment of that, drop lower. Note how this 0.25 aligns with the 0.5 of this 12 AM 12:30 opening range. So I expect something off that. Now the market is correcting. It's like a child who has done something wrong and now is doing something nice to make it for what he had done. The market has been disrespecting this fair value gap, and now this is correction. The body is staying below that. Now we drop. So I'm having an order block right there. This is a bearish order block. If we manage to close below it, becomes a bearish order block and market selling off lower. I'm happy for this initial buy side being respected like this. Now I know I'm on the right side of the market. Speed below this, need the opening gap. Expect speed below that. This order block told you is the next barricade for price, and the first presentation fair value gap. Expect this to be inversed and then we drop lower. So we have taken out that lower formed in yellow, expecting this to stay open. So going back into the market maker sell model thing that I was talking about, if I'm to leave that on and now this is the sell off starting. We test into this key level, then market drops. This is my distribution. This is the distribution phase right there. This is distribution. How can I make this? How can I make this? How should I make this? Can I do what? Nah, my chat is going to look fucked up. option then to make it red. I will take this off. So this is my distribution. This is my distribution. Lower, so I wish we close below this. So market retesting into that will give me having an order block. I need bearish fair value gap, having a bearish fair value gap right there. We're hoping to come back into that. Let me lock this in place. Okay. So now this is the market maker somewhat starting to work in place, going into 11 AM trading, so having the reversal after 10, and that is then something of the how a candle has to open. So that is one of the profiles. Need a closure below this to show me that this is going to fail. Now, I do not expect the market to trade back above this high. This is my stop loss being off to this high. If we trade back into this, I'm out. Peace and quiet. Yeah, so I'm expecting the market to respect this, not this to be a pullback and the market going higher. So I'm having this short-term lot taken out. Looking at these imbalances right there. Trade back into that. I'd want the market to stay in the lower half of that. Having this as a protected high right there. You do not expect the market to trade back above this high. So this gets inversed. Not like this. I do not like this. That's not a good sign for what I'm doing right now. What could be the reason right now? Okay. Everything in the market happens for a reason. Now I'm looking for a reason and I've got it, having 11 a.m. opening up, so that this candle is opening up right there. This is 11 a.m. open. Actually, this stays the same. It is 11 a.m. open, so I'm having the market running back higher. So this is the macro. The market ran in that macro. So if I'm to mark 1050 to going into 1110, macro is still on. $10.50 to 11.10, macro is still on, having my protected high right there. It is imbalance. Last line of defense is initial buy side liquidity. This dashed line, this is my last line of defense since here. If we go above that and close above it, then I'm out. I'm no longer interested in that. To put these quadrants off. Let's expect the market to take out this no. So get trading back above. What is the market running for? Within this open, we are creating a Judas string. So this to wherever it goes, this is manipulation. I want you to sit tight and you have to endure this. This is manipulation. Market is manipulating for higher prices. That is manipulation. So wherever it goes, I'm expecting it to reach this. This is a Judas swing. I have to put this on. That is a Judas swing. This, Judas is, if you know a slaughterhouse for sheep, there is there is that thing where when the cows are going to be slaughtered, they are pushed into a tunnel that is narrow, so they cannot come out of it, or to turn back, so they cannot turn back. If they are going, they have to go in front, and that's it. So this is a Judas swing. For you to analyze this as buys, yet we are going to sell off. Now you're going to use this as an inversion for an entry for buys, and you're going to get stopped out immediately. Watch and look at that. You're going to see. But this Judas swing implies that market has failed to reach initial buy side. By the way, this is a good indicator in price that we are going to sell off. Now this is the market making amends for what it did here in this distribution. Now that is a Judas swing in distribution in a macro. Now this is my expected breaker. And the market to close below that. On the market to drop below this, we test into that. We are back to the 10 a.m. expected breaker right there. No SMT at the highs. The lows of the pairs are doing exactly the same thing. I have to take out this 11 a.m. opens up already higher. Now this is good. This is great actually. And a trade lower. That is great. It is my Judas swing. Optimal trade entry is going to be given to you right there. If you measure from, so it is that high. Okay, to fall to this is my expected breaker. So from that, falling lower. From that, falling lower. So now nothing happens at random. This is nowadays you have been having the lunch macro delivering first. So I'm having the 10 a.m. having 10 to 10:50 to 11 10 macro right there. You see, optional trade entry, drop lower, closure below that, having this as a tiny fair value gap right there. I'm going to mark it as that. Now, having that breaker, I want market to close below this, so this has to be an inversion fair value gap. Right there. So if you are trading the market maker models, you have to be well versed with the PDRs. You have to be well versed with the PDRs. Now I want the market to disrespect this first presentation. Sincerely, after that move, I think I will just take this off. So trade entry is no. I need that. I need this. This is so beautiful. Market delivered to that so good. Sweet spot right there. We deliver. Expecting this to be closed below. I'm having an initial sell side, not that. I have closed at that, move lower. Note the 10 AM expected bearish breaker. Close below it. Tap that, we drop lower. This is just the market being so beautiful. It's like a lady with big nyash. You know, when you are still new into the market, you happen to be, because I'm so interested in watching lives, I happen to be watching traders on live trading, but you see these YouTubers take long to take a loss, but guys know what they do. That's why I believe in the cult. I'm so much deep in the cult of ICT. You cannot talk me out of it. No matter what they say. They said he failed the rope in cap, so what? He failed. How many accounts have you blown? He didn't want to be like proving a point or something. But guys, take it as if it was a war to pass the Robin's Cup and be the top. Things fail by the way. And if you don't know that in life, then you are a failure probably. Trading into the 12 AM to 12:30 opening range. At that. Have your 9:30 10 AM opening range. This is the 9:30 10 AM opening range low. We have traded into the 12 AM 12:30 opening range high and the low itself.
Uncle.
Yo. Still? Blessed Deus.
What the hell?
Nkatale wana oluzungu lunzita.
Gada. Kata oluzungu nakatale yuko. Maji?
YouTube yensi nekuwulira kati. So Jordan.
Yeah.
Ya oli bulala.
Okusomero wasitedinga shegi nankamba.
Oyombye.
Asogede naye. Nesina bubira. Yampisa atogede. Musange mulayibulali. Nero kumanya stand ayagayira musanze n'omuntu yobu. Nyafulumirawo. Nakolo nabadde simuliiko.
Buladi bagenda kukyawo.
Ekyo nkimanyi naye.